I hope you guys are having a good day. I'm Dr. Boyce Watkins from Your Black World and the Black Business School. And I wanted to give a quick note to investors. I know a lot of you guys are invested in the stock market, things like that. You guys know that that's my specialty. That's what I do. I'm a finance professor. And so one of the things I want to do is give you a quick market update for the Black Financial Channel. If you haven't subscribed to the Black Financial Channel, just go to theblackfinancialchannel.com. That's theblackfinancialchannel.com. Now, one of the things that's happening right now that you got to watch out for is it looks like regulators are starting to really look at Facebook, Google, and Apple. They're talking seriously about launching probes into potential antitrust violations, and these lawsuits could really disrupt your portfolio. In fact, I'm looking at this story on CNN Money, and the title literally is that antitrust lawsuits against Facebook and others could blow up your portfolio, according to Goldman Sachs. And a lot of you own Facebook shares. I'm looking here, and it says Washington's crackdown on big tech creates a treacherous landscape for investors long accustomed to blockbuster growth from this industry. U.S. regulators reportedly laid the groundwork for potential antitrust investigations into Facebook, Google, and Apple and Amazon as well, which is a big deal. Recently, there was actually an interesting story where they were talking about how Walmart shares were growing faster than Amazon. Who knows? Maybe that played a part in that. I don't know. The specter of a possible war with the federal government has already spooked Wall Street, driving down shares of these tech superstars. Goldman Sachs is urging clients not to take rash action, in part because the consequences of the crackdown will be case dependent. And that's true. There's no telling what the government regulators are going to do. They've done some pretty heavy work in the past with IBM, AT&T, and Microsoft, but that was at a time where antitrust law was taken a lot more seriously. The government was quicker to take real, meaningful action and do real things. Now, they sort of, have these big hearings and they put on a big show and then nothing happens. If you recall, last time Facebook had its little hearing situation with Zuckerberg sitting in front of Congress. If you look back on that, it amounted to nothing. I mean, it amounted to nothing but spectacle. So there's a possibility they could just be doing this for show. What's fascinating to me is that this is really being pushed by the Democrats, which means that it'll probably get bipartisan support, because I think the Republicans and the conservatives are definitely concerned about, censorship, things like that. But then again, maybe they're less concerned about that than they are about the money. So if they see a financial benefit to the growth of these companies, or if they're very pro-business, maybe that's keeping them from pushing as hard as they can. I honestly don't quite get why the Democrats would push forward with this. I'm going to research that a little bit more. I do actually. Let me scratch that though. I do understand why antitrust violations are a concern, because they have violated antitrust law. In my opinion, all the benchmarks for antitrust violations, Facebook has violated all of that. I mean, they've met every mark. At least Google, Alphabet, the parent company of Google, they've at least tried to be a good corporate citizen. I think Amazon and Apple have behaved somewhat responsibly. Apple a little less so than even Amazon too. They've all got issues, right? Some anti-competitive practices, killing off the competition, kind of doing things that are harmful to consumers. But I think Amazon can at least say that we've kept our prices low. They can say that we've been pretty consistent with our customers. I've been a customer of all these companies. Right? A lot of you have have done business with Google, Apple, Amazon, and Facebook. And Facebook is the one company that everybody seems to hate. Facebook is kind of in a different league in terms of being the lead criminal. So I wouldn't be surprised if there was an outcome that led to swift punishment for Facebook, and the other companies kind of got away with maybe a fine or something like that. Basically, they say Goldman Sachs is saying that the uncertainty right now is still too high to recommend investors avoid stocks that are in the regulatory spotlight. But when they look at stocks from the past, when they look at IBM, AT&T, and Microsoft, they found that those companies have all seen tremendous drops during government regulation. And what's also been even worse is that long-term growth has actually declined. So when you look at companies like Facebook, particularly Facebook, I would say not as much so Amazon, Google, and Apple, because they're pretty mature. I believe long-term growth plays a huge role in their stock price. So I think that the deceleration of growth, while it's a natural part of corporate maturity of a company just kind of maturing in the industry, I think decelerated growth will probably have a bigger impact on the Facebook stock price than the other companies. But anyway, moving on. He says similarities among historical outcomes suggest that investors should reduce their exposure to any stock that becomes subject to an antitrust lawsuit. So maybe that's either selling off or buying other assets to kind of counterbalance that. Maybe their competitors. You know, you see Walmart's competing with Amazon, or they're trying to. Maybe Walmart becomes a good buy. Who knows? Maybe that's why Walmart stock has actually been going up, because this information is already out there in the market. And as you guys know, if you take my stock market class, you know that one of the things I tell you guys is that information that's out there is going to immediately hit the price. It's not like you can go trade on information that's publicly available and expect to make some sort of enormous return. It's really a matter, all of it's everything speculation at this point for the most part. Breakups or fines. Of course, it's too early to know how this will play out. At this point, it's unclear if Washington will attempt to break up one or multiple big tech firms, or perhaps they will just try to regulate them. It's also possible that they get away with a slap on the wrist, like just, you know, a major fine. But it's clear that the regulatory risk is rising. There's bipartisan outrage featuring not just potential regulatory probes, but an antitrust investigation from the Democratic-led House Judiciary Committee and tough scrutiny from officials in the European Union. Yeah, Europe has really gotten really sick of Facebook. And unlike the United States, they actually have the ability to act when their citizens want them to act. The U.S., we all get pissed off and then nothing happens, and we sit there mad because our leaders have all been bought and sold and everything else. Whereas in Europe, they're a little more ethical. They push down a little bit harder on privacy violations. I think privacy is probably the biggest thing that's kicked Facebook in the butt. You know, and the other companies are probably pretty upset with Facebook, because I think that they look at Facebook like a sloppy player. Facebook's always shifting their algorithms and destroying businesses. They're giving away people's data. They're censoring people for no reason. So they're kind of creating all this outrage because I think their leadership is a little less mature. You know, Mark Zuckerberg is young. I think he's 32, something like that. You know, maybe 34. I don't know how old he is, but he's not as old as the leaders of the other companies. And I think that they look at him and probably, you know, are a little bit disappointed with that. Let me see. Large cap tech will without question face significant choppy waters, says Peter Kinney, a veteran market strategist and founder of Kinney & Company. Kinney urged investors to be cautious. There are too many unknowns. Unknowns are risk. Uncertainty is risk. So higher risk means lower prices, because in the equations that decide what a stock price is going to be, higher levels of risk reduce the stock price. That's pretty much what it boils down to. The ironic problem for big tech is that it may have become too successful, especially in today's shrinking stock market. The number of listed U.S. companies has halved from 8,000 in 1996 to just 4,000 today. That decline has largely been driven by a shortage of IPOs and a boom of mergers. So a lot of these mergers have occurred maybe because some of these big companies are buying everybody up. At the same time, tech has become more dominant. Based on 2018 sales, the most concentrated industries of the U.S. stock market are tobacco and interactive media services, according to Goldman Sachs. Facebook and Google laid claim to 87% of last year's sales with the interactive media and services space, the firm found. Google alone counted for 63% of the sales, and while Amazon makes up just a small slice of the massive retail industry, it generated 72% of last year's revenue in the internet and direct marketing retail space, Goldman said. In many ways, this dominance fueled the rise of these superstar stocks, enabling them to rack up monster sales growth, enviable margins, and lofty valuations. History shows that while government efforts to break up dominant companies isn't always successful, it can still be costly to investors. Antitrust lawsuits create massive distractions, enormous legal bills, and cast a shadow over companies. They talk a little bit more in the article about breaking up Ma Bell, basically AT&T, and how that went down. In 1974, the U.S. sued to break up Ma Bell. The case took 8 years to be decided and dealt a sizable blow to AT&T's valuation along the way. AT&T's relative price-to-book multiple tumbled from 1.3 to 0.7 after the breakup was ordered. Price to book is one of the measuring sticks used to measure growth of expected growth of the company. While AT&T's valuation eventually rebounded, its sales growth decelerated from an average of 10% before the breakup to 4% after. Microsoft also stumbled even after the settlement, and there's a long history to say that getting a real investigation from regulators can cost you big time in your portfolio. So if you got these stocks in your portfolio, I'm not going to tell you what to buy, what not to buy. I'll tell you what I'm doing, and then if you want to just use that information, you can. I'm not going to increase my holdings in these companies. I'm going to actually make a move and maybe look at some of the competitors, look at some of the other tech stocks. Also, we got the exposure to the situation in China. That affects companies like Apple. I think Apple's kind of getting hit, in a lot of different areas. It'll be interesting to see how that plays out. But beyond that, though, the key idea is consistency. So that's consistency is kind of the rule of investing for the most part. So anyway, I'm out of here, guys. Do me a favor, hit the thumbs up button, hit the like button, share button, and subscribe button. Subscribe to theblackfinancialchannel.com. That's where I do daily financial updates. theblackfinancialchannel.com. Also, every week, every Tuesday, we have a meeting of our investing masterclass. masterclass. So if you'd like to join my stock market investing masterclass, feel free to go to drboycemasterclass.com. That's drboycemasterclass.com. I'm out of here, guys. Have a good day, and I'll see you soon. Take care. Bye-bye.